If you have a child that is about to go to college, you are probably well aware of a thing called FAFSA and applying for federal student aid. In today's episode, we're going to be talking about some of the rules and things you should think about and at least know before, hopefully before you filled out FAFSA. And if you're listening to this after you have filled out FAFSA, but it's still in the current year and we're still applying for like the upcoming year, there are things that you can do to amend it. So if you are a parent of a child that is about to go to college or has been going to college for a while and you've been filling it out, but you're unsure if you've been reporting things correctly, this is a video for you. Welcome to Elephant Corner Financial Lab. My name is Nev Kraguljevic. I'm a financial planner, and my goal here is to help individuals just like you and me figure out how to improve and optimize their finances. Today's episode, we are going to be talking about college education and FAFSA specifically. FAFSA stands for Free Application for Federal Student Aid. And whenever I talk to my clients, I always say, fill it out. It's free. It will take, I don't know, 10, 15, 20 minutes to fill it out. And the benefit of it, even if you believe that you're not going to qualify because you have too many assets and too much income and too many blah, 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 fill it out anyway. It is free because life changes. Life is unpredictable. I don't know about you, but at least my life is. Things don't always go the way I exactly expected them to. Sometimes they're better, sometimes they're worse, sometimes better turns into worse and worse turns into better. Who knows how it all works? But the idea is it's not constant and things change. And so maybe today your income is super high. But what happens a year from now where maybe you lose your job, or maybe your business doesn't do as well, or maybe something happens with the assets and they, right? It's unpredictable. We never know. The challenge is that when you don't fill it out for the year one, many schools will go and say, well, they don't want this, so they no longer allow you to fill it. Now, not every school does that, but there are schools that actually do it. So for that reason, I tell folks, fill it out. The worst that you're going to get is no. Guess what? You're not worse off than when you started. But if you don't, you actually might be able to get some stuff and not even know. And yes, there are folks with substantial assets that have received full aid on for their children. There are folks with high incomes that have been able to receive aid. So please don't discount it. Just make sure you work with a financial planner that understands how these things work and can help you with it. And them, hopefully, together with like legal and tax advisory, boom, right? So anyway, what we're going to talk about here is a couple of things to note and to think about when we're filling out FAFSA. Now, we're going to go to the whiteboard so that we can think through. One of the things that I always like to remind my folks is that there are parent assets and then there are student assets. I don't know why I put students, just one student. Okay, we're just going to deal with one student at a time. Okay, now parent assets, so it's going to be income and assets. I am actually going to spell the full thing on assets because, well, you know why. It is much more beneficial, okay, beneficial to have things under the parents versus students, because parents get certain thresholds that they can keep without putting the assets are at a lower percentage, whereas students, everything is much higher. So whenever possible, we're going to try to have things under the parent assets and parent income and not under students. Okay, so that's rule number one to think about. Now, rule number two to think about is now we're going to be talking about the parent stuff. Okay, so there are income, all of income is reportable. You got to report income as is, right? They're going to be pulling your IRS returns, and it's going to be called the prior year. So if we're applying for 2026-27 academic year, they're going to be looking at the taxes from 2024. Okay, so now it's not going to be what happened in 25, right? We're not reporting what's happening right now. We are reporting what happened in 2024. Okay, for 26. Now, if we're applying for 2025, 2026 academic year, because maybe they're starting in January, then it's going to be 23. So it's always going to be 2 years before, right? So it's a prior year is what they call it. Don't ask why. That's the official name. Okay, so that's something to think about. They're going to be pulling that, and that is the income that you'll be reporting, right? So if the income for 2024 was $100,000, okay, that is what you're going to be reporting. It doesn't matter that it's 50 now. It doesn't matter that it's 200,000 now. If it was 100,000 in 2024, that's the income that you're going to be reporting. Now the assets are a little bit different, right? So this is what happens on the income. Okay. Now on the asset side, it's actually what you have now. And when I say now, as in like the date of application. So if you're applying today, and today when I'm recording this is December 2025, I'm going to go in and say, all right, today, how much is in my savings? How much is in my checking? How much is in my IRA? How much is in my 401k? How much is in my business? How much is in my brokerage? How much is it, right? Assets are now. So it's not prior, that's just for income. Assets are what is reportable right now. Now, not all assets will count. Okay, so let's think about, right? So we have assets that are reportable, okay, and assets that are non-reportable. Okay, reportable assets is going to be your savings, okay, and checking, right? What do you have in your savings and your checking? Your brokerage, okay? If you have, right, like real estate outside of your primary residence, whether that's a secondary home, investment property, doesn't really matter, you're going to be reporting that as well, right? Income from that is also going to be reported, but that's going to be in the income for the year prior. Right? So those are going to be things that are going to be reported. The non-reportable things are going to be your retirement accounts, okay, your qualified annuities, okay, your life insurance, okay. Also, what is not going to be reportable is your personal business. Now, this one comes with the caveat, okay? So let's talk about it. So, retirement, most people have it, don't report it, don't put it there. Qualified annuities, it's kind of like a retirement, right? Qualified basically is retirement piece, is not reportable. Life insurance, policy, cash value, it doesn't matter, it's not reportable, it's not on that. Business and farm, right, is not reportable if you 100% own it. It's family owned, meaning you have to own it, and you have under 100 full-time employees or full-time employee equivalent, right? Most most small businesses qualify under that. So if you were, like let's really think about it here, okay? So let's move it over here where it makes sense, and let's really think about it. So let's say that you have, saved $1 million in your retirement account. Okay. All right. And let's say, you have, I don't know, 200,000 in qualified annuities, and, you have, I don't know, 50K in cash value in it. And your business is valued at, I don't know, 2 million. Okay. None of this stuff is reportable. Okay. Most people don't know this, right? Which is why I'm doing this video and talking about it, right? This is, we're talking like well over 3 million, right? I mean, this is $3.25 million right here, that is not even reportable on it, right? And then let's say that in your, savings and checking, you have, I don't know, 50K, and let's say that your brokerage is 200K, and we'll talk about this. So please hold. Right. So we're talking about 250K that is going to be reportable out of $3.5 million, asset base, which is why I tell folks like, don't shortchange yourself and look at this and go, I have 3.5 million. They're never going to give me anything. No, 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 no. Reportable, you only have $250,000. Now, strategies, there are things that we can talk about, but let's talk about one of those strategies. Let's assume that this is a rental, right? Okay. And it's 1 unit, 2 units, 20 units, it doesn't matter, right? You have a rental property that's right, it's an investment, but it's also a business if you structure it correctly. So make sure you structure it correctly. And if you don't know how to structure it correctly, make sure you work with financial professionals who can help you get there. If it is a business, it transfers to the business side and as such is not reportable. Again, same rules have to apply in order for this to work. Okay, so these are the key components that you really should know. And so I tell folks like, hopefully you haven't filled it out. Watch this. And if you have, there's a thing called amendments. You can actually go in and amend the return, and you can go in and amend what you submitted for FAFSA. Now it has to be accurate and correct. Here is an example. I worked with a client. They didn't know, well, they didn't know what they didn't know. So they went in and they were filling things out, and it says, put in all of your assets. Okay. Now, they put in a small, tiny little print of like, what is reportable, what is not reportable. And so people are like, all right, well, I have this much in retirement, and I have, savings here and checking here, and I have this annuity, and I have this life insurance. And so the client reported all of their assets, reportable and non-reportable. And then they get their SAI. SAI stands for Student Aid Index, which is basically what tells schools is like a starting point of like, hey, we sort of expect you as a parent, well, as a student, but of course we know that students get money from the parents, that you'll pay X amount. And so all of a sudden their SAI was like in hundreds of thousands of dollars. And they're like, I can't afford this. Like, this is not my situation. I don't know how to do this. So we started to look into it. I said, go into the federal student aid, download your FAFSA, send it over to me. Let's take a look at it. So I looked at it. We went line by line, looked at everything. And I said, well, do you have all these assets? They're like, well, yeah. I'm like, okay, well, tell me more about it. So we're talking about it. And I'm like, okay, well, that's retirement. That doesn't count. That's annuities, qualified annuities. That doesn't count. That's life insurance. That doesn't count. That's a business. Well, how many employees do you have? Who owns it? What is the structure? What is the setup? That doesn't count. Next thing you know, we were able to actually say, you need to go and amend this because you didn't fill it out correctly. It wasn't that they were lying, it's just they were reporting things that they specifically say, please don't report. But a lot of parents don't know not to report it. So you might be hurting yourself and inflating your SAI. Okay. The end result of it is that we were able to go in from these like ridiculous amount of money to like, okay, you qualify for federal aid, and talk about a win. So I implore you to go in, take a look at what you have. And if you're not quite sure, you're like, I don't really know, then work with a financial professional that can help you figure things out. I hope this was helpful. I hope you have learned something. If you know anybody that has kiddos that are about to go to school, that are going to be applying for all this stuff, like, help me help them. Share it with them. Give me thumbs up, subscribe, and until next time, stay money blessed.